This year has been brutal for the stock market, and it could get even uglier as the Fed keeps tightening in order to stamp out inflation. Wouldn't know that after today's action, but there are some groups that are doing just fine with or without this upside move. And you know what I'm talking about? I'm talking about groups like the defense contractors. Thanks to Russia's invasion of Ukraine, we are seeing a renaissance in defense spending worldwide, which is why both Northrop Grumman and Lockheed Martin can be up double digits for the year, even as the S&P 500 is down 23%. Remember, it was down 25%? That was yesterday. On top of the war, the defense contractors have the added advantage of being more or less recession-proof. They're not tied to the consumer at all, or even the enterprise. You know what? They feed at the federal trough, meaning they don't have to care too much about the broader economy. But not everything in the industry has been working. Some defense contractors have struggled with supply chain woes or rising raw costs. Others have folded into larger, more diversified companies with weaker end markets, and nobody talks about them. As we approach the end of the year, though, there's one defense play that I like quite a bit going into 2023, even as it's lagged the best performers in the group. And I'm talking about one that's a real mouthful. They really ought to change the name, to be honest. It's called L3Harris Technologies, because I liked both L3 and I liked Harris. It's one of the most tech-savvy defense contractors in the game. They make all sorts of electronics and communication equipment. They think integrated mission systems, intelligence, surveillance, renaissance, reconnaissance, space, avionics, electrical warfare, precision engagement sensors, and drones. Yes, this stuff has become the bread and butter of the modern military. But L3Harris still gets less attention than its more famous compadres like Lockheed or Raytheon, which is on everybody's lips. I've been recommending this stock ever since the old L3 Technologies merged with Harris Corporation 3 years ago, and it's been a good long-term performer. Remember, I said I liked both of them. When they got together, I liked them even more. But recently, the stock's come down dramatically from its highs. I think it's gotten to levels where you have to pounce.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.